Welcome to the deep dive. Today, we're going to be looking at British American tobacco.
BCED.
BTAT, right?
Yeah.
And where they might be by 2025. I think you'll find this one pretty interesting, especially if you're thinking about maybe investing in them or just curious about how the tobacco industry is evolving. We're going to unpack an article from the Motley Fool about whether you should buy, sell, or hold BET stock. And as always, we're going to try to make it as fun and painless as possible.
Yeah, this is a company trying to straddle two worlds, right? The shrinking world of traditional cigarettes and the uncertain but potentially lucrative world of next-gen nicotine products.
Right.
So let's see if we can make sense of it all.
Perfect. The article dives right in, highlighting BT's really attractive 7.9% dividend yield.
Wow.
Now, that's pretty significant. Almost $8 back for every 100 you invest.
Right.
And that's just in dividends. What makes this particularly interesting is that this high yield is actually a hallmark of the tobacco industry.
That's right. You see, even during economic downturns, people tend to keep smoking. It's a habit that's notoriously difficult to break. And for companies like BAT, that translates into a pretty reliable stream of revenue, which allows them to offer these high dividends.
Yeah. It's fascinating how some habits are so ingrained, even when times are tough.
Yeah.
But here's the thing. BAT stock performance has been pretty flat over the past 5 years, despite this reliable revenue. Clearly, there's more to the story than just those big dividends.
Yeah.
And that brings us to the elephant in the room, the global decline in smoking rates.
Exactly. This decline is a major challenge for Bannock, and it forces them to look beyond traditional cigarettes for growth. They're investing heavily in what they call next-generation products, which include things like vapes, heated tobacco, and nicotine pouches. They're hoping these new products can capture that market of smokers looking for alternatives.
It's like they're trying to reinvent themselves. And that's no easy feat for a company so deeply rooted in traditional tobacco. But this transition hasn't been all smooth sailing, has it? I mean, the article mentions a 9% drop in their vapor product sales in the first half of 2024, and heated tobacco isn't doing much better.
It seems they're facing some stiff competition in this new market. For example, Philip Morris International is already a leader in next-gen products, particularly with their Zyn nicotine pouches and IQS heated tobacco. They've seen significant growth with these products, which puts a lot of pressure on Beatty to catch up.
So maybe Beatty was a little slow to adapt, or perhaps they just haven't found their winning product in this next-gen space yet.
Right.
But wait, there is some good news, right? The article highlights the impressive 52.4% growth of their Velo nicotine pouches. It's a smaller part of their business, but it seems like a potential bright spot.
That's an important detail. It suggests that BK is capable of innovating and finding success in certain segments of this new market. The question is whether they can scale this success up to offset the decline in their traditional cigarette business.
It makes you wonder if those traditional cigarettes are becoming a bit of a burden for them, sort of weighing down their potential for growth in these new areas. Speaking of burdens, the article drops a bombshell, a whopping $32 billion write-down on their U.S. cigarette business just last year.
Ouch.
It's gonna hurt, right?
It's certainly a significant event. A write-down essentially means that a company admits their assets are worth less than they previously thought. In Beatty's case, this indicates that their iconic U.S. cigarette brands like Camel and Newport have lost value due to the declining smoking rates in the U.S.
So it's not just declining rates, it's specifically a U.S. problem.
Interesting. Are they seeing this in other parts of the world? Well, the article mentions that smoking rates are declining globally, but it's happening at a slower pace internationally compared to the U.S., so they're facing a bit of a squeeze. Declining demand in their core markets, coupled with increasing regulations and health concerns surrounding their core product.
That sounds like a tough situation, but they're a big company, right? Can't they just raise prices and make up for the lost revenue? I mean, people who are addicted to nicotine are more likely to pay higher prices.
While they have been raising prices, that strategy has its limits. Increasing prices too much could push more people to quit or switch to cheaper alternatives, especially with the rising popularity of next-gen products.
So their hands are somewhat tied. Now, to add another layer to this already complex puzzle, the Motley Fool points out that BAT has a low price-to-earnings ratio, just 8.
8.
Which apparently is something we should pay attention to.
This low price-to-earnings ratio, or PE ratio as it's called, suggests that BAT's stock might be undervalued compared to its earnings. This means investors aren't willing to pay a high price for each dollar of profit BAT generates, which could present an opportunity for savvy investors.
Hold on. Are we saying BAT is a bargain stock? Is now the time to buy, or is it more complicated than that?
It's definitely not that simple. The market is usually pretty efficient at pricing stocks based on their future prospects. This low PE ratio might already be factoring in BAT's limited growth potential due to the challenges we've discussed.
So it's not a clear-cut buy and probably not a screaming sell either. They have that amazing dividend and a relatively cheap stock price, which are pretty attractive.
That's where things get interesting. The Motley Fool seems to be leaning towards hold for BAT in 2025. They argue that while there might not be huge potential for massive growth in the short term, the consistent dividend makes it a good option for income-focused investors.
So the big question is, what are those next-gen products going to do? If Beatty can pull a Philip Morris and really find a winner there, things could get interesting.
Absolutely. That's the wild card that could change the entire game for Date.
Yeah.
Imagine if they managed to create a blockbuster product like Zyn, which has seen remarkable success, that could transform their prospects and potentially lead to significant growth.
Okay, so we've got a company with a solid dividend, a seemingly undervalued stock, but facing a declining core market and struggling to gain traction in a new market. I'm starting to see why this is such a dilemma for investors.
It's a classic case of weighing risks and rewards. On the one hand, you have the stability of their traditional business with its consistent cash flow. But on the other hand, you have the uncertainty of their next-gen products and the potential for disruption in the tobacco industry.
So where do we go from here? How do we even begin to make sense of all this? And more importantly, what does all this mean for you, our listener?
That's what we'll pick up in the next part of our deep dive. We'll explore the potential of BT's next-gen products in more detail, and we'll try to answer the big question: is BT a buy, sell, or hold for 2025?
Sounds good. We'll be back right after this. Welcome back to the deep dive. So we're in the thick of it now, trying to figure out if BT is a good investment for 2025. We've talked about their attractive dividend, the declining smoking rates, and their struggle to break into the next-gen market. Where do we go from here?
Well, let's delve a bit deeper into those next-gen products, because that's where things get really interesting. It's not just about replacing cigarettes with vapes. It's a whole spectrum of new technologies and nicotine delivery systems.
I'm curious about that. What makes these next-gen products so different from traditional cigarettes, and why are some like Velo performing better than others?
One key difference is the way nicotine is delivered. Velo, for example, is a nicotine pouch, similar to chewing tobacco, but without the tobacco leaf. These pouches provide a quick hit of nicotine without the smoke or vapor, which appeals to a certain segment of consumers, especially those concerned about the health risks associated with smoking.
So it's not just about quitting nicotine altogether, it's about finding alternatives that might be less harmful or more socially acceptable. Is that what's driving the growth of Velo?
It's certainly a factor. Velo is discreet, convenient, and doesn't produce any secondhand smoke, which makes it appealing for those who want to use nicotine in situations where smoking or vaping might not be appropriate.
Okay, that makes sense. But what about those other next-gen products, like vapes and heated tobacco? Where do they fit into this picture?
Vapes and heated tobacco products are targeting a different market. Often smokers who enjoy the ritual and sensation of smoking, but are looking for a potentially less harmful alternative. However, these products face different challenges, including evolving regulations and public perception.
I remember a lot of negative press around vaping a few years ago, especially concerning youth usage. Did that impact the market for vapes?
Absolutely. Public health concerns, particularly regarding youth appeal and potential health risks, have led to stricter regulations on vaping products in many countries, which has definitely impacted their growth.
It seems like B80 is facing hurdles on all sides. Declining cigarette sales, a challenging next-gen market, and increasing regulations. But they're still holding on, aren't they? That dividend is still pretty tempting.
That's the dilemma investors face. While B80 is grappling with these challenges, they also possess some strengths that shouldn't be ignored. Their established brands' global reach and robust distribution network give them a competitive edge, particularly in emerging markets where smoking rates are still relatively high.
So they have a foothold in markets that might still have some growth potential even as developed markets decline. That's an interesting angle.
And we can't forget about that low price-to-earnings ratio. Remember, a PE ratio of 8 suggests that the market might be undervaluing BEAT. Now, whether this is a genuine opportunity or a reflection of their future prospects is up for debate, but it's certainly something to consider.
I'm starting to see why the Motley Fool recommends a hold position. It's a mixed bag with both risks and potential rewards. It's not a clear-cut buy or sell, but more of a wait-and-see situation.
Exactly. The key takeaway here is that BT is at a crossroads. Their future hinges on their ability to navigate the evolving tobacco landscape. If they can successfully transition towards next-gen products and capitalize on growth opportunities in emerging markets, they might just surprise the market.
It's like they're in this balancing act trying to stay afloat while also learning to fly with these new products. This whole situation is making me think about the broader implications for the tobacco industry. I mean, is this the beginning of the end for traditional cigarettes? Or will they always have a place even as these next-gen products gain popularity?
That's a really fascinating question, and it's one that experts have been grappling with for years. It's hard to say for sure what the future holds, but it's clear that the tobacco industry is undergoing a profound transformation. The rise of next-gen products, coupled with shifting consumer preferences and stricter regulations, is reshaping the landscape.
It's a bit like watching a caterpillar transform into a butterfly. Only in this case, we're not sure what kind of butterfly it's going to be or if they'll even survive the metamorphosis.
That's a great analogy, and it highlights the uncertainty and potential volatility of investing in a company like Beat. There's a lot at stake, and the outcome is far from certain.
So how do we as potential investors or even just curious observers make sense of all this? What are the key things to watch for in the coming years to gauge Beat's success?
There are a few key indicators to keep an eye on. First, their performance in the next-gen market will be crucial. Can they develop and market successful products that appeal to a wide range of consumers? Second, their ability to maintain profitability in their traditional business while managing declining sales will be key. And finally, their ability to adapt to evolving regulations and public health concerns will play a significant role in their long-term success.
Okay, so we need to watch their next-gen strategy, their core business performance, and their regulatory adaptability. Got it. But what about that dividend? We haven't talked about that in a while. Is that something we should still be excited about?
That's a great question, and it's one that we'll address head-on when we return for the final part of our deep dive. We'll examine the sustainability of BT's dividend, taking into account all the factors we've discussed, and try to provide some insights into whether it's a reliable source of income for investors.
Sounds good. We'll be right back after this short break.
Welcome back to the deep dive. So we've covered a lot of ground with BT, their strengths, their challenges, and their uncertain future. But there's one piece of the puzzle we haven't fully addressed yet, that juicy 7.9% dividend. Is it sustainable? Is it something investors can count on in the years to come?
That's the million-dollar question, isn't it? And to be honest, there's no easy answer. Remember that high dividend yield is a major draw for many investors, especially those seeking a steady income stream. But as we've discussed, BT is facing some significant headwinds.
Right, like declining cigarette sales, the struggle to compete in the next-gen market, and those pesky regulations. It makes you wonder if they can keep paying out such a high dividend if their core business is shrinking.
That's a valid concern. However, it's important to remember that BT is a cash-generating machine. Even with declining sales, their traditional cigarette business is still incredibly profitable, and they've been actively managing their costs and streamlining operations to maintain profitability. So they're tightening their belts. But can they keep those dividend checks rolling in? What does the Motley Fool article say about this?
The Motley Fool seems to believe that the dividend is sustainable for now. They point to BT's strong cash flow and their commitment to returning value to shareholders. However, they also caution that the dividend is not guaranteed and could be reduced in the future if their financial performance deteriorates significantly.
Okay, so it's not a sure thing, but it's not a lost cause either. It sounds like a classic risk-reward scenario. Investors who are comfortable with some level of risk might find that dividend very attractive, while those seeking absolute safety might want to look elsewhere.
Precisely. It all comes down to your individual investment goals and risk tolerance. If you're looking for a high-yield stock with the potential for long-term growth, BAT might be worth considering. But if you prioritize stability and predictable income above all else, there might be more suitable options out there.
So after all this analysis, are we any closer to answering the buy, sell, or hold question for BT in 2025? It still feels like a bit of a mystery to me.
The truth is, there's no crystal ball when it comes to investing. We can analyze the data, consider the trends, and weigh the risks and rewards, but ultimately the decision is up to each individual investor.
Fair enough. But this deep dive has certainly given us a lot to think about. We've gone from a simple buy, sell, or hold question to a complex analysis of a company trying to reinvent itself in a rapidly changing industry. And that's what I love about these deep dives. We uncover so much more than we initially set out to.
That's the beauty of exploration, isn't it? We start with a specific question, but as we delve deeper, we discover new perspectives, connections, and possibilities. And often the most valuable insights come from the questions we raise along the way.
Absolutely. So as we wrap up this deep dive into BAT, I want to leave you with one final thought. Think about what this company's journey tells us about the future of the tobacco industry. Is it a dying industry clinging to the past, or is it evolving and adapting to a smoke-free future? And what does that mean for investors, consumers, and society as a whole?
Those are excellent questions, and I encourage you to continue exploring them. Read more research and form your own conclusions. After all, that's what the deep dive is all about. Sparking curiosity, encouraging critical thinking, and empowering you to navigate the complexities of our world.
Well said. And on that note, we'll wrap up this episode of The Deep Dive. Thanks for joining us on this journey, and we'll see you next time for another fascinating exploration. Until then, keep learning, keep questioning, and keep diving deep.